and Pakistan, Kosovo, Serbia. I think on Friday we have coming in the off all over. They're coming in. We did 2 others in addition to that. Nobody's ever done anything like this. No, I consider him a person that's, I think, been misguided. I'm very surprised, actually. I thought we would have had that settled easy. I've settled 4 of them in the meantime. But he did call up, and he said, you know, he's close to Iran. He'd like to help us get a settlement. I said, no, you help me get a settlement with you, with Russia. And I think we're going to be doing that, too. Yeah, please. Go ahead, please.
Thank you, Mr. President. You've made clear your position on what impact the strikes had. I wanted to ask you what is next with Iran. For instance, is there any indication from U.S. intelligence that Iran was able to move any material?
No, just the opposite. We think we hit them so hard and so fast they didn't get to move. And if you knew about that material, it's very hard and very dangerous to move. It's called, in many people, they call it dust, but it's very, very heavy. It's very, very hard to move. And they were way down. You know, they're 30 stories down. They're literally 30, 35 stories down underground. Oh, yeah, we think we think it's covered with granite, concrete, and steel.
Can I ask you, are you interested in restarting negotiations with Iran? And if so, have they responded?
So our people, Marco could answer this, but our people are not, I'm not. The way I look at it, they fought, the war's done, and, you know, I could get a statement that they're not going to go nuclear. We're probably going to ask for that, but they're not going to be doing it. But they're not going to be doing it anyway. They've had it. They've had it. Now, maybe someday in the future we'll want that. But I've asked Marco, do you want to draw, I just asked him the question as we were walking on the stage, do you want to draw up a little agreement for them to sign? Because I think we can get them to sign it. I don't think it's necessary. Marco, do you want to talk about that, please?
Well, Mr. President, I think President Trump has shown a willingness to meet and talk to anybody in the world who's interested in peace. I don't know of any president that's been as willing as he has to meet with anyone and talk about peace. We'd love to have peaceful relations with any country in the world. And so obviously that'll depend on Iran's willingness not just to engage in peace, but to negotiate directly with the United States, not through some third country or fourth country process. But I know of no president, probably in our modern history, that's sought peace more than President Trump has.
Sounds like the door is open, but you're in no rush. Is that right? Sounds like the door is open. But
I'll tell you what, look, we're going to talk to them next week with Iran. We may sign an agreement. I don't know. To me, I don't think it's that necessary. I mean, they had a war, they fought. Now they're going back to their world. I don't care if I have an agreement or not. The only thing we'd be asking for is what we were asking for before about we want no nuclear, but we destroyed the nuclear. In other words, it's destroyed. I said, Iran will not have nuclear. Well, we blew it up. It's blown up to kingdom come. And so I don't feel very strongly about it. If we got a document, wouldn't be bad. We're going to meet with them, actually. We're going to meet with them. Yeah. Yeah, go ahead, please.
Yes. Mr. President, Netherlands TV, thank you for visiting our country.
Good.
As I understood,
Thank you.
I, of course, would like to know how you slept last night at the House of the King.
Oh, I slept beautifully.
But probably a more serious question. I think you just had a meeting with President Zelensky. Did you discuss any ceasefire in this Russo-Ukrainian?
No. I wanted to know how he's doing. He was very nice, actually. You know, we had little rough times sometimes. He was couldn't have been nicer. I think he'd like to see an end to this. I do. I think what I took from the meeting couldn't have been nicer, actually. But I took from the meeting that he'd like to see it end. I think it's a great time to end it. I'm going to speak to Vladimir Putin, see if we can get it ended. But look, these are brave people. They're fighting these wars all over the place. You know, last week they had, I guess, I told you, close to 7,000 young soldiers, Russian and Ukrainian soldiers were killed, 7,000 in 1 week. It's crazy. It's crazy. So I'll be speaking to Putin. No, I had a good meeting with Zelensky. And I had a lot of good meetings. We had a lot of good meetings with a lot of people, a lot of great leaders. But he's fighting a brave battle. It's a tough battle. Yeah. Go ahead, white dress.
Thank you. Ida Hallikainen from Finland, Ilta-Sanomat.
Good.
You have played golf with President Alexander Stubb. How do you see Finland as a NATO ally and partner, and how would you describe your relationship with our president?
Well, he's a very good golfer. Okay. In fact, he was on his college golf team. He went to a good college in the South, as you know, a very good college, and he was a good golfer. We had a good time. I think my relationship's great. I want to buy icebreakers. You know, you're very good at icebreakers. And I actually made him an offer. I didn't go to Congress. They'll try and impeach me for this. But there's an old, it's not old, it's fairly new, but it's used icebreaker. And I offered him about 1/3 of what he asked for. But we're negotiating. We need icebreakers in the U.S. And if we can get some inexpensively, I'd like to do that. Actually, they'll fix it up, make it good. Also, we may buy some icebreakers. You know, you're the king of icebreakers, that particular country. They make them good. They make them really good, and they know what they're doing. And so we're negotiating with them for about 15 different icebreakers. But one of them is available now. It's old, and it's old. It's like 5-6 years old. And we're trying to buy it. I'm trying to make a good deal. That's all I do my whole life. My whole life, that's all I do is make deals. Yeah, please. Go ahead. Sir, go ahead.
Yeah, a question for NewsHour, Dutch TV. First of all, on Article 5, on your way here, you spoke about the commitment of the U.S. to Article 5, saying, I'll give you my definition once we're here.
Yeah.
What is your definition, and may the U.S. commitment to Article 5 change in case some of the NATO members do not reach the threshold that was discussed today? My second question is following up on a colleague on Iran. What intel reports do say that everything over there was obliterated?
Yeah, well, there are numerous of those reports, and they're coming out fast and furious. But the most respected ones we've already seen. And I will say that on a very confidential basis, they're looking at the reports, like numerous reports, and including people going to the site and checking the site. And they're going to be having, I guess you're going to be having over the next couple of days a full, you're going to encapsulate it. But no, the site was obliterated, just like I said it was, and just like the pilots should be given credit for. As far as Article 5, look, when I came here because it was something I'm supposed to be doing, but I left here a little bit differently. I said, I watched the heads of these countries get up, and the love and the passion that they showed for their country was unbelievable. I've never seen quite anything like it. They want to protect their country, and they need the United States. And without the United States, it's not going to be the same. And you can ask Mark, or you can ask any of the people that were there. It was really moving to see it. They love their country. They were so respectful of me because I'm the head of the United States. And I made, the King of Saudi Arabia, when I was in the Middle East. So I was in Qatar for a different reason, not a reason to get shot at. We were in there for economic development reasons, Qatar, UAE, and Saudi Arabia. All three leaders of those countries, and we took back $5.1 trillion into the United States. All three leaders said, you're presiding over the hottest country in the world. The United States right now is the hottest. Everybody wants to be there. Everybody wants a piece of it. He said, a year ago, your country was dead. You had a deadhead running it. You had a country that was dead, and it was dead. You had people pouring through the borders. You had inflation. You had everything. He said, you've made it in 5 months at that time. You've made it the hottest country. This is the hottest country in the world. The United States right now is the hottest country in the world. And when I was around that table, it was a nice group of people, many of whom I knew from previous. When I saw the passion they had for the country, almost everyone, and you probably have the tapes, it was very public, but almost every one of them said, thank God for the United States. Without the United States, they couldn't really have NATO. It wouldn't work. It wouldn't work. It will in the future because now they're paying much more money, but it wouldn't work. It was great. And I left here differently. I left here saying that these people really love their countries. It's not a ripoff. And we're here to help them protect their country. Okay, we'll do one or two more.
Thank you, Mr. President.
Yeah.
A question on Spain. Are you satisfied with today?
Oh, I think Spain's terrible what they've done. No, I do. They're the only country that won't pay the full up. They want to stay at 2%. I think it's terrible. And, you know, they're doing very well. The economy is very well. And that economy could be blown right out of the water with something bad happening. You know, Spain is the only country that... Are you from Spain?
Yeah.
Good, congratulations. You're the only country that is not paying. I don't know what the problem is. I think it's too bad. So we'll make it up. You know what we're going to do? We're negotiating with Spain on a trade deal. We're going to make them pay twice as much. And I'm actually serious about that. We're going to make Spain... I like Spain. I have so many people from Spain that it's a great place and they're great people. But Spain is the only country out of all of the countries that refuses to pay. And, you know, so they want a little bit of a free ride. But they'll have to pay it back to us on trade because I'm not going to let that happen. It's unfair. It's unfair to NATO. All right, sir, please. Go ahead, right in the back. Yeah, you, tall one. The tall man.
Mr. President, Johannes Petra from Austrian National Television.
How are you?
You once said that you would end the Ukraine war in 24 hours. You later said you said that sarcastically.
Well, of course it was sarcastic.
But you've now been in office for 5 months and 5 days. Why have you not been able to end the Ukraine war?
Because it's more difficult than people would have any idea. Vladimir Putin has been more difficult. Frankly, I had some problems with Zelensky. You may have read about him. And it's been more difficult than other wars. I mean, look, we just ended a war in 12 days that was simmering for 30 years, frankly. We ended Rwanda and the Congo. It's coming to sign the documents. We've already signed basic documents, but they're coming, I think, to the White House on Friday. We ended Serbia was going to go at it. But maybe the most important of all, India and Pakistan. And that wasn't whether or not they may someday have nukes like we're talking about in the Middle East, like we're talking about with Israel and Iran. This is they have nuclear weapons. I ended that with a series of phone calls on trade. I said, look, if you're going to go fighting each other, it was getting very bad. You know how bad that last attack was. It was really bad. If you're going to go fighting each other, we're not doing any trade deal. No, you have to do a trade deal. I said, we're not doing any trade deal. And in fact, I had the general, who was very impressive. The general from Pakistan was in my office last week. You know, Prime Minister Modi is a great friend of mine. He's a great gentleman. He's a great man. And I got them to reason. I said, we're not doing a trade deal if you're going to fight. And if you're going to fight each other, we're not doing a trade deal. And you know what? They said, no, I want to do the trade deal. We stopped the nuclear war. Go ahead. Go ahead, Jeff. Here's another beauty, Jeff. He's a beauty, all right. Go ahead.
Mr. President, to follow up on Ukraine, will the United States contribute any more money to Ukraine's defense this year to the $5 billion that allies are giving? And one question, you had another meeting with the Dutch opposition leader, Mr. Wilders. Can you tell us about that meeting? And are you upset about his anti-Muslim stance?
I'm not upset about it. It's just his view. He's unhappy with the way things are going in this country and various countries. He was an opposition leader. And I was asked to meet with the opposition leader by the people that are running. I think they have some deal where if you have a meeting, you're supposed to meet with an opposition leader. I said, that's strange. We don't do that. But I met with I didn't know him. He seemed like a very nice guy, but he's in opposition to the current people, and that was set up by the current people. So I assume when I met with the Prime Minister, you're supposed to meet with the opposition. We'll have to try that sometime in our country. Let's not do it. But I thought he was very good. As far as money going, we'll see what happens. There's a lot of spirit. Look, Vladimir Putin really has to end that war. People are dying at levels that people haven't seen before for a long time. Go ahead. Go ahead. White shirt. Oh, she's all excited.
So, BBC News Ukrainian.
Where are you from?
I'm from Ukraine.
Oh,
so my question to you is whether or not the U.S. is ready to sell anti-air missile systems Patriot to Ukraine? We know that Russia has been pounding Ukraine really heavily right now.
Are you living yourself now in Ukraine?
My husband is there.
Wow.
And
I can see you very, it's amazing.
and me with the kids. I'm in Warsaw actually because he wanted me to
Is
be.
your husband a soldier? No?
He's
He's there now?
yeah
Wow. That's rough stuff, right? That's tough. And you're living here?
in Warsaw.
And you're a reporter?
I am.
Good. So let me just tell you, they do want to have the missiles, okay, as they call them, the Patriots. And we're going to see if we can make some available. They're very hard to get. We need them too. We were supplying them to Israel, and they're very effective, 100% effective. Hard to believe how effective. And they do want that more than any other thing, as you probably know. That's a very good question, and I wish you a lot of luck. I mean, I can see it's very upsetting to you. So say hello to your husband, okay? Thank you. Go ahead. Thank you.
Thank you, Mr. President. You were criticizing
Where are you from?
Bloomberg News.
Oh, Bloomberg. That's wonderful.
You were criticizing the Federal Reserve Chair before coming to this summit.
Yeah, I think he's terrible.
I was wondering if you've begun interviewing different candidates for the Fed pick.
Yeah, I know within 3 or 4 people who are going to pick. I mean, he goes up pretty soon, fortunately, because I think he's terrible. We have no inflation. We have a tremendous economy. Hundreds of billions of dollars of tariff money is pouring in. Factories are being built because they don't want to pay the tariffs, so they're building them all over the country. I think we're close to $15 trillion. I told you 5.1 trillion from the Middle East alone, but of investment money coming in. There's never been anything like that in the history of our country. But we have no inflation. And we have borrowing because Biden, stupidly, they did short-term debt. So we have borrowing coming up. And, we'll go 10 years, maybe longer, maybe shorter, but we'll go a long period of time when we do the debt. And because of him, because of this guy, we will have to pay for years. We'll be paying for him. And I said to him, listen, there's no inflation. He says, but maybe there'll be some. That's true. I said, if there is some, what you do is raise the rate. I'm okay with that. You raise the rate in 2 years from now or a year from now. But because the rate's high, we have to pay more for debt. It's pretty equal. In other words, if it's 4%, it's 4%. If you drop it a point, you'll pay 3%. So it's fairly equal, not necessarily, but fairly equal. So we're going to end up paying maybe 2 points or 3 points more. 3 points would be about $900 billion a year because of this very average mentally person. He's an average mentally person. I'd say low in terms of what he does, low IQ for what he does, okay? Wait, so instead of paying $900 billion, we don't want to pay 900 just because he doesn't want to lower the rate. I said, if there's inflation in 2 years or 3 years or 1 year from now, you raise the rate and you take care of the inflation, among other things. But he's probably a very political guy, I guess. I don't know. I think he's a very stupid person, actually. All right, one more. Let's go. How about you? Go ahead. She looks so happy and everything.
Thank you.
That's why I
I'm
picked
from
her.
Spain too. I'm Ana Buch from La Vanguardia. I wanted to know if
You're where from?
Spain too. I wanted to know if you want to.
That's the Spain corner right there. Shouldn't have said that. That's okay. I do like Spain, by the way. I think it's unfair that they're not paying, but go ahead.
Are you going to negotiate directly with Spain about?
I'm going to negotiate directly with Spain. I'm going to do it myself. They're going to pay. They'll pay more money this way. You should tell them to go back and pay. You're a reporter? You tell them to go back. They ought to join all of those countries that are paying 5%. Spain's going to be just about the only one that's not. They were the most hostile toward doing it. It just doesn't make sense to me. Okay. All right, Kelly, go ahead. Here we go. There's another one.
Hello, sir. Thank you
We got them all today.
Okay. So, Mr. President, you talked about expecting some on-the-ground assessments at Fordo and other sites.
Now here,
Is that
here
Israeli and U.S.?
It's been obliterated, Kelly. It's been
What is your message then, sir, to the intelligence community when they present reports? You're not disputing the DIA report. You're just
They presented a
exists.
report that wasn't finished. We're talking about something that took place 3 days ago.
I understand that's
The report was done
So
2
what
days
is
ago.
your-
Wait a minute.
Yes.
They didn't see it. All they can do is take a guess. Now, if you take a look at the pictures, if you take a look how it's all blackened, you know the fire and brimstone is all underground because it's granite and it's all underground. You don't show it. But even there, with all of that being said, the whole area for 75 yards around the hole where it hit is black with fire. The group that's run by this gentleman, in fact, you may want to talk about it for a second because we're going to issue a report. And I think it's not even a very exciting report at this point. It's been obliterated, totally obliterated. And they did a report, but it was like, if you look at the dates, it's just a few days after it
Understood,
happened.
sir.
So they didn't see it. They said it may be very severe. Go
Understood.
ahead.
Do you have a message for the intelligence community, though, in terms of unvarnished information getting to you, that it's not?
I don't really have a message. I would say issue the report when you know what happened. I wouldn't say that it could be severe or maybe not. They use the word severe. It could be severe or maybe it's not.
And briefly,
So people like you picked up and said, oh, it's not severe.
We're just
No,
looking for
the report was not a complete report. Yeah, the message was probably wait till you know the answer before you
and
go
sir,
ahead.
did you not have a public component to your Zelensky meeting for a tactical reason with President Putin?
Let him answer this.
Hello, Mr. Secretary.
Yeah. There's a reason the president calls out fake news for what it is. These pilots, these refuelers, these fighters, these air defenders, the skill and the courage it took to go into enemy territory flying 36 hours on behalf of the American people and the world to take out a nuclear program is beyond what anyone in this audience can fathom. And then the instinct of CNN, the instinct of the New York Times is to try to find a way to spin it for their own political reasons to try to hurt President Trump or our country. They don't care what the troops think. They don't care what the world thinks. They want to spin it to try to make him look bad based on a leak. Of course, we've all seen plenty of leakers. And what do leakers do? They have agendas. And what do? Do they share the whole information or just the part that they want to introduce? And when they introduce that a preliminary report that's deemed to be a low assessment, you know what a low assessment means? Low confidence in the data in that report. And why is there low confidence? Because all of the evidence of what was just bombed by 12 30,000-pound bombs is buried under a mountain, devastated and obliterated. So if you want to make an assessment of what happened at Fordo, you better get a big shovel and go really deep, because Iran's nuclear program is obliterated. And somebody somewhere is trying to leak something to say, oh, with low confidence, we think maybe it's moderate. Those that dropped the bombs precisely in the right place know exactly what happened when that exploded. And you know who else knows? Iran. That's why they came to the table right away, because their nuclear capabilities have been set back beyond what they thought were possible because of the courage of a commander-in-chief who led our troops, despite what the fake news wants to say.
But you're not disputing the report said what it said, even though it was initial.
The report said what it said, and it was fine. It was severe, they think, but they had no idea. They shouldn't have issued a report until they did, but we've gotten the information. I think Pete said it better than you can say it. And, you know, you should be proud, you, especially you, should be proud of those pilots, and you shouldn't be trying to demean them.
No, there's
those pilots flew at great risk, a big chance that they'd never come back home and see their husbands or their wives. Let me just tell you, you and NBC, fake news, which is one of the worst, and CNN, New York Times, are all bad. They're sick. There's something wrong with them. But you know what? You should be praising those people instead of trying to find some. By getting me, by trying to go and get me, you're hurting those people. They were devastated. You know, I got a call from Missouri, great state, that I won 3 times by a lot. And I got a call that the pilots and the people on the plane were devastated because they were trying to minimize the attack. And they all said it was hit. But we don't think it was really maybe hit that badly. And they were devastated. They put their lives on the line, and then they have, and I'm not referring to you, but real scum come out and write reports that are as negative as they could possibly be. It should be the opposite. You should make them heroes and heroines. You should make them really people that they were so devastated when they heard this news. And you know what they said? One of them, I spoke to one of them, said, "Sir, we hit the site. It was perfect. It was dead on." Because they don't understand fake news, because they have a normal life, except they have to fly very big, very fast planes. But it's a shame. You should be making them heroes. All right, in the back. Go ahead, back, white, yeah. White jacket, yeah. Go ahead, give him a mic. Hello.
Deborah Haynes from Sky News.
Good.
Mark Rutte, the NATO chief, who is your friend, he called you daddy earlier. Do you regard your NATO allies as kind of children?
No, he likes me. I think he likes me. If he doesn't, I'll let you know. I'll come back and I'll hit him hard, okay? No? He did it very affectionate. Daddy, you're my daddy.
Do you regard your NATO allies, though, as kind of like children, and they're obviously listening to you and they're spending more, and you're obviously appreciative of that, but do you hope that actually they're going to be able to defend themselves, defend Europe on their own?
I think they need help a little bit at the beginning, and I think they'll be able to, and I think they're going to remember this day. And this was a big day for NATO. You know, this was a very big day. They took it. One of the gentlemen said, "You know what? We've been trying to raise money raise the rate for 30 years," he said, 20 years, from almost the beginning. And he's been there for a long time. He said, "Until you came along, it never happened. What you did is amazing." It's been sort of an amazing day for a lot of reasons, but also for that. Yeah, go ahead.
Do you think they can do it without you, though, in the future? Can they do it without?
Well, ask Mark.
States?
I mean, you have to ask Mark. Okay. So we're heading back. We're heading back. I want to thank these two gentlemen behind me. They're incredible people, both of them. They've done a fantastic job. And Susie's in the front, and she's done great. And Monica, thank you very much. That was quite an exciting time. And we're going to be heading back. We'll be back soon, and we'll see you in Washington, D.C. Remember this, we have the hottest country anywhere in the world. Thank you very much, everybody. Thank you.
President Trump speaking at the NATO summit, talking mostly about Iran, addressing some reporter questions there, saying that the nuclear site has been obliterated. And he had his defense secretary there to back him up on that. He said, "We think the Iran-Israel war is over." He said, "We've collected intelligence since the strike that show that it is obliterated." He also said that they're going to be the U.S. is going to be speaking with Iran next week, and they can maintain their position, which has been very consistent. He said no nuclear policy. They may have some sort of agreement, said that that's not necessary. And then, David, he got a question from Bloomberg on the Fed chair, and he took the opportunity to continue to attack him, called him an average mentally person, low IQ for what he does, a stupid person, totally disagrees with his policy, and also made fun of him, actually mocked him for saying, "Oh, inflation might come. We don't have inflation right now," he said, so Powell should be cutting rates and helping us when it comes to these very high interest rates.
All this while, of course, the Fed chair is testifying before the Senate Banking Committee. But again, nothing new there in terms of the president's rhetoric.
No, nothing new, just continuing to pile on. Megan Casella is with us to help break down what we just heard. Megan, went after Spain, continued to praise NATO for increasing their defense spending. I'm curious what else you took on.
Absolutely. As you mentioned, most of this was on Iran. And there was one point that I think was the biggest headline from this news conference was the president saying that he did not care whether or not we had a formal agreement with Iran, with them pledging not to create a nuclear weapon. He says he doesn't think that that needs to be put in writing. He did say that he'll be meeting or at least talking with them next week, but he doesn't care if there's an agreement or not. That was a direct quote. So a big headline there and a big shift in that tone. He said maybe sometime in the future we'd want that, but at the moment he doesn't think it's necessary. On the Powell point, or the Fed chair point, I did think it was interesting that for the first time publicly he confirmed he has begun interviewing candidates to replace Powell. And he says he thinks he's within 3 or 4 candidates. He knows who he's going to choose, suggesting there's forward momentum there, and that despite just how much time is left in Powell's term, I think it's about 10 or 11 months at this point, they are moving forward on that. Maybe we will ultimately see an early nomination. The other thing on Spain that I would flag, he's very angry because Spain is the one country country that did not commit to this spending pledge to increase their defense spending. He was saying that he would make Spain pay in any trade deal because of that. He can't make Spain individually pay in trade negotiations because the European Union negotiates as a bloc. So it's only something that would be a punishment towards the entire bloc. I'll note, he can't do it towards Spain individually, but this is one more thorn then in the side with Europe. We already know those negotiations have been tough. It's one more thing that's on the table there.
Megan, I was going to ask you about Spain, and you've made the point, of course, in terms of the potential negotiation. That said, we're dealing with a stock market right now that is not as focused any longer on the war between Iran and Israel, and perhaps will be refocused again on tariffs in July 9th. And the lack of trade deals, at least at this point, with so many of the countries that we thought might be close, whether it's India, South Korea, Japan. The EU doesn't seem to be. What are you hearing, or what are the expectations in terms of where we stand right now?
What we know is that they do keep saying there's one thing after the next that's been sort of filling the administration's plate ahead of the trade deals. First, it was the dust up with China that required everyone to go to Geneva and then London a few weeks back. They said that was why they hadn't gotten side deals. The latest we've heard this week is that the big, beautiful bill and those negotiations with Congress are now taking up some space, and that the trade deals will come after that. It's also very possible, of course, everything that's been going on in the Middle East has been a distraction as well. So I highlight all of those because they've been talking about all the things they've been doing besides negotiating trade deals. They say that's why we haven't gotten these side deals yet. Of course, other countries say it's because the negotiations aren't done or they're not going well. There's different issues with each trading partner. That's all to say that when we get to this July 9th deadline, we've already heard the Treasury Secretary say if negotiations are ongoing, they might postpone it. I think it's very possible, and there's increasing expectation, I would say, that we will see the deadline extended, at least for some trading partners. It's definitely not set in stone, but part of me thinks that that's what they're laying the groundwork for here when they talk about all the things they've been doing that's distracted them from the trade negotiations.
I mean, market doesn't seem worried about it, right? Megan, thank you. Megan Cassell. The other point I would just make, we're about to hear from Fed Chair Powell again yesterday, and his comments, he's very unfazed by the political attacks from President Trump. He's had them before. They're definitely getting louder and more intense now. But, just sticking with, we're doing what we need to do for the American people within our mandate. And I would also note that even the Republicans, and we'll see what we get from Senate banking, have not been overly aggressive toward Fed Chair Powell. He's done a lot of work sort of winning a lot of respect on Capitol Hill. So with that, we'll take some more questions and answers for the Fed Chair from the senators. Let's listen in.
And we're working on all that right now. We're also going to, we have a proposal out to sort of smooth the results of the test from year to year. So this is something we're working on hard and expect to have important progress later this year when we begin to publish the models.
I'm anxious to see it. Thank you, Mr. Chairman.
Senator Ricketts. Yes, sir.
Thank you, Mr. Chairman. As we were talking about tariffs a little bit earlier, the senator from Virginia talked about Australia. I will point out that Australia has, we bought about $28 billion worth of Australian beef, and they've bought exactly zero of ours. So there's an opportunity to be able to improve that trade relationship. So that's one of the things I hope will come out of the trade negotiations.
You will acknowledge there is, though, a trade. We actually have a trade.
We actually
surplus.
have a trade surplus with Australia. That is correct. But we'd like to sell more beef to them. So that's an opportunity. But one quick question on that, kind of just following up on Senator Kennedy's line of questioning. So if a tariff was put in place and the prices went up, wouldn't that be a one-time event, right? Because after that, it would be baked in. It's just a one-time thing.
So it might well be, as I indicated in my opening remarks, it might well be a one-time event, but that isn't a law of nature. We would want to make sure of that. We were more sure of that back in 2018 because we'd had 40 years of low inflation. Coming off of a global inflation episode where we haven't fully returned to 2%, it's something that's a question we will approach carefully.
But if the tariff is only put in once and just maintains the flat rate there, then how could that be inflationary in the second year?
Well, because it could be a process of many years. I mean, that's a couple of things. One is if it comes in quickly and it's over and done, then yes, very likely it's a one-time thing, like an oil shock, a one-time oil shock where the price comes back down, it goes through the system. It doesn't raise inflation, just raises prices once. But if you have a process that goes on multiple shocks for years, for example, or if the shocks are very large, that kind of thing. And I think, again, we have to be conscious of the current situation, which is people haven't seen 2% flat inflation for some years now, and it's different from what it was in 2018 when we had tariffs earlier, when we actually cut rates. So I'm not saying we're not reacting at all to this. It's a risk we feel like as the people who are supposed to keep stable prices for the benefit of the American people, we need to manage that risk too. That's all we're doing. We're not deciding what to do yet.
So if Senator Warner's comment that a tariff is a tax, would that imply that then taxes could be inflationary as well?
No.
So what's the difference between a tax and a tariff then? Or do you disagree with Senator Warner's characterization that tariffs are not taxes?
I wouldn't disagree with that, but it's not the language I use. Look, this is, as I say, one time could be the base case, but in a situation like this where the process could go on for a long time, where the effects could be large or small, it's just something you want to approach carefully in a world where inflation is not back to 2%. And that's our job. If we make a mistake here, people will pay the cost for a long time. And so we're just approaching the question carefully. That's all we're doing. You know that, a majority of my committee has said that they do expect to cut rates between now and the end of the year in the remaining 4 meetings. So it's not that we're, taking a strong view that it will be inflation and not a one-time cost increase. It's just that we're going to take a careful approach to that very critical question.
Yeah. Well, let me switch gears on you a little bit. Communist China is our single greatest threat to America's national security and financial independence. Now more than ever, the U.S. must ensure the security of our financial system against Communist China's malign influence. And in 2022, Senate Homeland Security and Government Affairs Committee released a report identifying efforts by Communist China operatives to infiltrate the Federal Reserve System. The report contained real-life examples of Communist China's attempts and tactics used to target Federal Reserve officials. In late January, a former senior advisor to the Fed Reserve was arrested on charges that he conspired to steal Federal Reserve trade secrets to benefit and advance Communist China's interests. This Wall Street Journal article from May 2025 details the potential ramifications of his actions. The kind of data and trade secrets that this Fed Reserve employee shared could allow Communist China to manipulate the U.S. market and gain advanced knowledge of changes to the federal funds rate. It could provide Communist China with an advantage when selling or buying U.S. bonds and securities. Chairman, has the Fed Reserve made any changes to strengthen its internal counterintelligence and security protocols since the development of these incidents?
So that's an incident, and I would say we take it very seriously. We have quite elaborate and serious and strict provisions around staff access to information, serious protections for confidential information. We have background checks. We have annual training. We have many of those things. I don't know that we've made any fundamental changes, but we're certainly, sorry, very sorry to see something like this having taken place. We're certainly looking at the protections we have in place.
Great. Well, I have another question, and we'll just submit as a QFR, but I know the chairman said you've got a heart out, so I'll go ahead and yield back my time. Thank you, Mr. Chairman.
Thank you. Senator Van Hollen.
Thank you, Mr. Chairman and Chairman Powell. Good to see you. I want to start by acknowledging the continued uptake of the FedNow real payment system. I know I've raised the development and rollout of that system with you in many, many hearings over many years. We're now about 2 years after launch. I want to continue to work with you and your colleagues to encourage expanded adoption of the capability and capacity so that customers have real-time access to their money. So I just ask that we continue to work on that together. You agree?
I do.
I thought you might. Thank you. So I want to ask you about the student loan situation in the country. And you've talked about this in the past, and you've talked about how it can be a drag on the economy, especially when it gets to be very high in terms of balances that cannot be paid. According to the New York Fed, student loan balances grew by $16 billion to reach $1.63 trillion in the first quarter of this year. Data shows an uptick in the student loan delinquency rate overall, the age of delinquent borrowers, and the number of newly delinquent borrowers. The Department of Education, meanwhile, restarted debt collection activities last month, and starting in July, nearly 2 million borrowers could see their wages being garnished. Meanwhile, here in the Senate, President Trump and Republican senators are working to pass this piece of legislation that would limit affordable loan repayment options and make it harder for borrowers to responsibly repay their debt and get back on a path toward financial health. So, Mr. Chairman, you said before in your testimonies that student loan debt can negatively impact borrowers' ability to fully participate in our economy, and that it can weigh down on the economy overall. Is that still your view?
Yes, it is.
And could you just share your assessment, just from a factual perspective, about how this problem seems to be growing at this point in time, and what would happen if we allow all of these borrowers to default?
So the point I was making, I try hard not to comment on things that aren't Fed policy, but I broke that rule in this case many years ago, so I'll just say what I said then, which is I try hard not to comment on. You can make all kinds of investments, and you can discharge if you can't pay back the loan, you can discharge it in bankruptcy. The one exception we make is student loans. And I ask whether that is wise national policy. People borrow to invest in their education. That we do not forgive. It seems like something for Congress to consider, that's all. It's none of the Fed's business, really. Ultimately, it's not a big macroeconomic thing, but I've said it before. I said it again.
Mr. Chairman, I appreciate your breaking your own rule before, and I appreciate your
I won't do it again.
now. I could not agree with you more about the anomaly in the ability to discharge a debt in bankruptcy. The idea that student loan sort of is the one category of debt that we don't allow to be discharged is confounding. I think, unfortunately, so far, it's been a sign of the power of some of the companies involved in that area. I just came from another committee where I'm being the ranking member, so I apologize if you already talked about the tariff situation. But I know this was obviously a factor that you all had to consider in making decisions about changes in the interest rates. Obviously, there's a lot of uncertainty in the economy. I mean, I hear it every day from Marylanders. We have the Port of Baltimore. We have lots of small businesses that rely on tariffs. You're an economist. You know that increasing tariffs is like increasing taxes across the board. But can you just speak to the uncertainty component of all of this and how that is weighing on people's decisions?
So surveys show very widely that people feel uncertain about the economy, and they do point to tariffs in that answer. I will say, though, that actually peaked back in April and has come down a little bit. And if you talk to businesses, I talked to an unusually large number of business people in the last couple of months, and the feeling is a little better now than it was. They're getting on with it and feeling, I'd say surveys are still showing depressed sentiment, but it's moved up from where it was.
I would say, Mr. Chairman, that may be the case at this moment, but we all know that we could wake up any morning and see another tweet, and that could change dramatically. So I appreciate your efforts to try to do what you can to meet your dual objectives at the Fed. Thank you, Mr. Chairman.
Yes, sir. Senator Lummis.
Thank you, Mr. Chairman, and thanks, Chairman Powell, for being here today. As you know, what always vexes me, and has for the last 4.5 years, about the Federal Reserve, is the bank supervision function as opposed to the monetary policy function. So I'm going to focus on bank supervision. First of all, I do want to thank you and Vice Chair Mickey Bowman for ensuring reputation risk has been removed from the bank supervision process. It was very arbitrarily used by those who were supervising. On January 27th, 2023, I'd call it the high watermark for Operation Choke Point 2.0. The Federal Reserve Board, in coordination with President Biden's White House, executed a coordinated attack to isolate the digital asset industry from the banking system. And while the Fed has taken steps to adopt a more balanced approach to digital assets, which I appreciate, the legacy of January 27th, 2023 remains with us today. So I'd like you to look at this quote. It says, issuing tokens on open, public, and/or decentralized networks or similar systems is highly likely to be inconsistent with safe and sound banking practices. So my first question is, do you recognize this quote?
Yes, not super clearly, but yes, I do.
Because it's from the Federal Reserve Board's policy statement on Section 913 of the Federal Reserve Act, which was formally adopted by the board on January 27th, 23. So now, Chairman Powell, I want to show you another statement, and I'm sorry if you can't see it clearly, I'll read it to you. It's from the Genius Act, which just passed the Senate by a vote of 68 to 30 last week, and it takes the opposite position to the board's policy statement on issuing stablecoins on an open, public, distributed ledger. So my question is, what has changed about the risk of stablecoins since the board adopted its policy in 2023? And now that the Congress has weighed in, at least the Senate has weighed in and sent the Genius Act to the House, does the board plan to withdraw the policy statement on Section 913?
So I think what has changed is, if you go back, that's a couple years ago, that was the period of high-profile failures and fraud and that kind of thing. And what's happened is, I think, the industry is maturing, our understanding of it is improving, and in a sense, it's becoming much more mainstream. So all of us are revisiting, the things that were done during that era. And I think the current view is that, that it's appropriate it's always been appropriate for banks to choose their customers and to be able to undertake activities as long as they're safe and sound. In terms of, I think I have to get back to you on 913. I think it's a broader thing that has nothing to do with crypto, but that was a piece of it. We are looking at and withdrawing many of our pieces of crypto guidance from that era, though, as you know.
And I appreciate that. I hope that by withdrawing the guidance, that you're also instructing and admonishing your bank's supervisors to when there are efforts to regulate banks that provide too much discretion to bank regulators to pick winners and losers from among the customer lists, the loan portfolios of banks. It's antithetical to the American system of banking. And I do think that there was that kind of discretion unleashed on banks, and it had a negative impact, a real chilling impact on banks as they selected and banked certain industries and then debanked other industries and other people during the last 4 years. So taking the guidance documents and policy statements out is important, but also guiding the people that there are changes now and that they can no longer use their own subjective biases towards DEI and ESG and other things in supervising the banks is also a critical component of bank regulation.
I agree completely. And as you know, Vice Chair Bowman is actually a former bank supervisor, so she's very well placed to make that happen.
And I realize that she as vice chair is more directly involved in bank supervision. I hope that you will use your row to punctuate the importance of those changes within the bank supervision function at the Fed.
We're going to have to move on.
Thank you.
I'm assuming your answer is yes. Senator Smith.
Thank you, Mr. Chair. Good morning, Chair Powell, and welcome to the committee. So, Chair Powell, a few months ago, you issued a warning about the trajectory of our national debt. Speaking at a New York Times event, you said the U.S. federal budget is on an unsustainable path. The debt is not only at an unsustainable level, but the path is unsustainable, and we know that we have to change that. Would you still agree that that is true?
Yes, that's the one thing that I would always say, and that my predecessors have said, and that's the kind of the only thing we say about fiscal policy.
Exactly. And I would agree with that. At a time when Americans are struggling to figure out how to afford their lives and have low confidence in the economy, to add to the deficit now, as the big beautiful bill does, just strikes me as unsustainable. Now, I'm not asking you to moderate between Republican and Democratic policy differences on the big beautiful bill, but would you agree that the big beautiful bill adds to the deficit based on the data that you've seen?
I'm just not going to comment on the reconciliation.
Okay. Well, I will just point out to my colleagues that the CBO says that it adds to the deficit. The Joint Committee on Taxation says that it adds to the deficit. The Yale Budget Lab says that it adds to the deficit. The Committee for a Responsible Federal Budget says that it adds to the deficit. The Penn-Wharton budget model says that it adds to the deficit. And even some of my Republican colleagues, Senator Johnson, Senator Paul, say that it adds to the budget. And as Senator Johnson says, it's wrong and immoral. So I appreciate that you won't comment on any of this, but let me just ask you an economic question. Can you talk a bit about what impact a rising deficit has on our goal of lowering costs for Americans, especially in the Trump tariff environment that we are in right now?
I'm sorry.
What impact does a rising deficit have on our goal of lowering costs for Americans, particularly when we are in this Trump tariff environment, the unpredictability of that?
So I think it's likely that when markets are pricing longer-term Treasury securities, there's something baked into that in the market's thinking about interest rates. What should be the appropriate interest rate? But it's hard to unpack that with any precision.
These are factors that have lots of interplay between one another.
Yes.
Yes. And Chair Powell, could you just comment briefly about the potential risks of stagflation, where we have slower growth and higher inflation? I know this is something that the Fed guards against, and could you just comment a bit on the risks of that and what it means for regular Americans trying to afford their lives?
So we're not seeing that now.
Yeah.
It isn't really the base case that that's what we're going to see. But of course, that's a very difficult thing because, a stagnant economy wants more stimulus, but an economy with more inflation wants less stimulus. So it puts the central bank in a hard place. We've warned of it, but it's honestly not something that we're facing or that we expect to face. But it's something we're monitoring is what's happening.
Thank you. I want to follow up on a question I asked you the last time you were before the committee. I asked about the impact of severe weather events, otherwise known as climate change, on home insurance costs. And you testified that, I think you said, if you fast forward over 10 or 15 years, there are going to be regions of the country where you can't get a mortgage because of the impact of the challenges of insurance companies just not being able to provide that. Since February, when I asked you that question, home insurance rates have continued to climb. A recent analysis about climate risk from First Street found that financial burdens from severe weather are driving up household costs and triggering increased mortgage defaults. Now, it's at about 8% now, but they project that by 2035, 30% of all foreclosure losses would be related to climate impacts, which is pretty stunning. Now, I realize this is a complicated issue because insurance is regulated primarily at the state level, though there are exceptions. Flood insurance and terrorism insurance are exceptions. But I wonder if you would comment on this. I'm thinking a lot about what impact this has on housing costs, which is a big component of inflation, and a place where housing costs are rising higher than the general inflation rate right now.
Many things are driving up housing costs.
Yes, that's true.
It's of course mortgage rates, but it's also zoning costs and things like this for properties that are near the water. Particularly, for example, we spend some time down in Florida. Property insurance just gets more and more and more expensive, and to the point where it also almost makes sense to self-insure, and that's because of just big losses. Companies are just putting that in their models, and they're charging what they need to, to charge to make a return. And if they can't get that, then they'll leave that state. So that seems to be what's happening.
I know I'm out of time, Mr. Chair. Thank you.
You're always polite. So,
Minnesota
gave her 22 seconds. Yes. Thank you,
That's why
ma'am.
they call me the Velvet Hammer, sir.
I didn't say that you weren't harsh as well. You're just nice when you do it, like just right now. See, Senator Moreno reminded me not to give Tina a compliment in the middle of the back.
Chairman Powell, just want to make certain I understand this correctly. Control inflation and maximize employment. That's it. Two things, correct?
Yes.
So let's take one at a time. Maximize employment. Do you care if every American makes minimum wage or makes a livable wage? Is that something that factors into your thought process? In other words, we have full employment, but most Americans are on substandard wages. Does that change your calculus?
Does it change my what?
Calculus. Does it? You can't. In other words, is it full employment is full employment? Every American has a job, but they're making minimum wage versus having a family sustaining wage. Does that matter to the Federal Reserve?
It would matter to the country a lot.
I'm saying, does it matter to the Federal Reserve when you're making your decision?
Honestly, we don't really have the tools to affect that.
Right. So it doesn't factor in. Now that's different than us. The people of this country elect us to make certain that their wages are higher than inflation. And by the way, let the records show that real wages are up this year. So we've done that, not the Federal Reserve. Second piece of it is, let's talk about inflation first.
Well, we've helped control inflation, which is part of that.
We're going to jump right into the inflation conversation. There's different kinds of inflation. There's different causes. There's not witnesses to inflation. There's key actors to inflation. Would you agree?
Sure.
Okay. So let's talk about the actors. Did you comment during COVID lockdowns that was a bad idea, meaning that you're shutting down the entire economy? It's not a button. I hit the button, you can hear me. It's on and off. COVID wasn't that. We just shut down the economy. Any comments on that?
Of course not.
Okay, so you didn't comment on that. Vaccine mandates, something that my Democrat colleagues loved. If you don't get the vaccine, you're a terrible human being. You can't go to work. In fact, Joe Biden was overruled by the Supreme Court because he said that if you work in a company with more than 100 employees and you don't get vaccinated, the company has the ability to fire you, unless you prove that you're negative on COVID. That obviously is a supply chain shock, wouldn't you agree? If I'm running an assembly line and now I have to put my people 6 feet apart and now I have people quitting or not coming to work or I have to fire them, that's a supply chain shock, wouldn't you agree?
I mean, it's a medical thing that you...
No, but it's a supply chain shock.
George Washington.
I'm not asking you to make a medical decision. I'm asking you to make a Fed decision on inflation.
Way outside anything we would comment.
But it affects inflation because supply...
It didn't, in fact.
Are you saying that supply chain shocks don't affect inflation?
They do, but that
Okay, they do.
didn't.
So that's clearly one. If you ban the export of liquid natural gas, which is going to cause the commodity price to go up, would that supply shock not also cause inflation?
Potentially could.
Yeah. So, and now the ranking member loves to talk about billionaire corporations, that are going to get away with paying taxes, right? Who pays corporate taxes? Like, who pays it? Is it like some obscure Wizard of Oz character behind the curtain that is a corporate entity that pays taxes? Who pays taxes?
I mean, ultimately, it's shareholders and customers.
So I'm going to read you a line. You tell me this is accurate. On taxes, it's not possible to know in advance precisely how the costs will be shared for taxes. I added
Correct.
that.
I would
But
agree.
it is highly likely that consumers will pay a meaningful share. Meaning if the ranking member has her way, let's just tax corporations at 100%. Why not? Be fantastic, right? Nobody would want to start a company, but that aside, that cost would be added to consumer products, correct?
A tax or a tariff? What are you talking about now?
If the income tax for American corporations goes up, they will share that tax burden with their consumers. True or false?
Yeah, ultimately.
Yeah. So then taxes do raise inflation. But you don't comment on it.
I mean, they haven't.
And you don't,
That's
but you
just
don't.
not true. I mean,
got
empirically, it's not true.
The chairman's going to beat me up in 56 seconds. So, but you sent me a very nice letter, which I appreciate. And it says the Federal Reserve plays no role in commenting on trade policy. So you don't comment on supply shocks. You don't comment on tax policy, which clearly affects inflation. You don't comment on demand pull. You just said now that we should forgive student debt. Why is a person that goes to Harvard, that gets a gender studies major, pays Harvard obscene amounts of money because professors are grossly overpaid there, is that person better than a working class Ohioan that is a plumber but can't afford a car because interest rates are too high and car prices have gone up? Why is that person? Why don't we forgive that person's car loan instead of forgiving their student loan? But you don't comment on that. You comment on tariffs. So I'm going to just show you.
I don't comment on tariffs at all, actually. I comment on
only
inflation.
commented on tariffs. You've
I'm
only
not commenting on the
tariffs.
wisdom of tariffs.
Look, the chairman's over there in the conversations. I'm going to show you a chart here. This is car prices.
I'm paying attention, however.
This is car prices since this year. Car prices are down. Car prices are down. Inflation in America is down. We got elected by millions of voters. You got elected by one person. He doesn't want you to be in that job. And you are costing this government $400 billion a year by refusing to lower interest rates. Nobody in this chamber has that kind of power to have a $400 billion impact on this economy, on our deficit. And I just think that you should consider whether you're really looking at this from a fiscal lens or a political lens, because you just don't like tariffs.
Senator Warnock is next.
Thank you, Chair Scott. Thank you, Chair Scott, and thank you, Chair Powell. Good to see you. The United States national debt currently exceeds $36 trillion. Last year, we paid nearly $1 trillion in interest on the debt alone, more than the federal government spent on educating and feeding our children. Chair Powell, how does the Fed consider rising national debt levels during discussions about adjusting interest rates?
We really don't. We take fiscal policy as completely exogenous, and we look at the data that's coming in, but we don't, we're never going to take into account budget deficits and things like that.
Well, here's my concern. Maybe Congress should be thinking about it. The world is losing faith in America's ability to repay our debt. We have seen a sell-off in the bond market. The United States dollar has lost more than 10% of its value against the euro and pound, and is down against nearly every single major currency in the world. Back in May, Moody's downgraded the U.S. government's credit rating because of growing debt and sinking confidence in lawmakers' willingness to address this issue. Historically, high debt pushes up interest rates, slowing economic growth and setting up a dangerous debt cycle where both interest rates and debt continue to rise. Chair Powell, how does the size and the trajectory of the national debt affect the Federal Reserve's ability to manage inflation in good economic times and spur investment and hiring in slower economic times?
I'm happy to say that today, those things do not affect our ability to do our job. The concern really is that if we don't do something, then there will come a time at which it will be a problem, not for us, but for the country. But that, at this time, it does not interfere in any way with our ability to do
that. Is a realistic concern in the future, given the rate of increasing debt. And it's something I'm concerned about, and maybe because it's in the future, maybe that's why, folks who have power, who sit in these jobs, aren't as concerned about it as perhaps the Congress should be. I'm concerned about it as a father of a 6-year-old and an 8-year-old. I'm concerned that my Republican colleagues are planning to ram forward a bill that, according to the Congressional Budget Office, will increase the deficit by $4.2 trillion. So I want us to think about that. We're taking food out of the mouths of hungry children. This bill could cut as many as 16 million Americans off of health care. When we think about Medicaid, 71% of the Medicaid recipients in Georgia are children. So we're taking their health care And then we're saying to these children that you'll have to deal with these trillions of dollars in debt one day. $4.2 trillion increase. Senate Republicans are trying to use a budget gimmick to claim the bill only costs a fraction of that by simply not counting things they don't want to count. If they don't like the math, they just change the formula. But the markets and those investing in our country don't care about these budget tricks. And I don't think it will help my 6-year-old and my 8-year-old when the bill comes due on this. They know the truth, and they will react based on the truth. The big ugly bill will put the United States on a disastrous fiscal path, and it will be catastrophic for our economy. Even worse, the big ugly bill is cutting people off of their health care, and for what purpose? To give tax cuts to the wealthiest. So this is an interesting moment for me, for someone who didn't know I'd end up in politics, or just paid attention to politics over the years. They're getting ready to create a whole lot of pain for a lot of people. And the question is, for what purpose? To give billionaires a tax cut. I think we ought to work together to prioritize extending tax cuts for the working class. We shouldn't be cutting their health care. We ought to save the country trillions of dollars by not giving more tax breaks to the richest Americans. And if we try to work together, we can save our economy from this disaster and still protect working families from a tax hike. I believe in tax cuts. I think working class Americans ought to receive them. And we ought not be burdening our children with all of this debt. With that, I yield, and the chairman should take note that the Baptist preacher is done with 3 seconds left.
And the people said amen. Okay. Senator Haggerty.
Thank you, Chairman Scott and Ranking Member Warren, for holding this meeting. And Chairman Powell, it's good to see you here again. Chairman Powell, I want to talk with you about inflationary and deflationary trends in our economy and how they impact your thinking. I understand, based on your testimony and recent statements, that you're acutely sensitive to the inflationary risks of our administration's trade policy. And though I note that it's not the Fed's responsibility to attempt to steer or to directly offset that policy in any way, I look at that, I look at your perspective, but I also look at many of the other developments in our country that I think present the opposite risk, which is a disinflation risk. And let me dig into this a bit. We're witnessing artificial intelligence adoption at breakneck speed. That's going to bring about productivity gains in nearly every aspect of our economy. We're about to pass a tax bill. That tax bill is going to encourage capital expenditures and long overdue upgrades to our manufacturing capacity, again, increasing productivity. And if you think about the concerted effort that's being undertaken by our federal government right now to reduce waste and bloated, unproductive government payrolls, all of these point to disinflationary productivity gains. So given the competing sources of uncertainty that we're talking about, it feels to me like the Fed's far more focused on tariffs and the inflationary impact of tariffs than on the deflationary impact of the points I just mentioned. So if uncertainty around tariffs is the primary reason that impacts your thoughts, I mean, how do you counter, how do you bring into account these disinflationary trends that I've just mentioned?
So we do look at the overall picture, and that's actually what's been happening is services inflation's been coming down, and that's been covering what we see so far, small increases in goods inflation. I would also mention a factor that you didn't mention on your list, which is regulation, which is an area which could also be over time disinflationary. Yeah. So we get that. I mean, I try to say that it's the broad sweep of policies and the broader economy that matters for inflation. I get asked about tariffs a lot, and that's the one where all forecasters are expecting, a significant increase between now and the end of this year. We don't know how big it's going to be. We don't know when it's going to come, but it's just something that we're waiting to see more information on so we can make a better decision on interest rates. That's all it is.
Well, I hear the discussion about not knowing the magnitude and the timing of the trade talks and the resulting tariffs that will ensue. It does seem to me that there's a bias toward viewing this as more inflationary than deflationary. And I'd like to ask you this. If Ambassador Greer is successful at bringing the trade deals together soon and alleviating that uncertainty, what would that do to your perspective on rates? Would that put you in a position to think more aggressively about lowering rates?
Yes, potentially it would. I mean, really, it's reducing uncertainty would help, and also just what's going to be the final tariff rate and getting that settled. And I think that's the path we're on. You know?
I think that's welcome news. I think the markets will welcome that as well, because I do believe that we're on the path, as you're about to say, of having some significant resolution in trade uncertainty. We've lived in an unbalanced world for years, where the United States has had the lowest tariff barriers in the world, and other nations have taken advantage of that. Jameson Greer and this team, Scott Besson and his team, the president, everyone is making a concerted effort to fix this. So I'm looking forward to that. The one other area I wanted to touch on, because it's touching close to home, and that is legislation that this committee has just passed out and that we've just passed in the Senate. That's to do with the Genius Act. We just passed it last week, and it provides an urgently needed regulatory framework for payment stablecoins, and it requires that they're backed one-to-one by cash or short-dated U.S. Treasuries. Over the last 5 years, the total value of outstanding stablecoins has increased from approximately $4 billion to over $2 billion today. One market participant has predicted that if a framework like the Genius Act is adopted, total issuance of dollar-pegged stablecoins could reach nearly $4 trillion by the end of the decade. So I wanted to get your perspective again, Mr. Chairman, of what impact would this new source of demand for bills have on the yield curve, and in particular, what impact would it have on short-term rates?
So more demand is going to have a tendency to drive down rates. I don't really have a sense of how big that effect would be, of course. And let me just say that it's a great thing that we're making progress toward a stablecoin framework.
Thank you, Mr. Chairman. I couldn't agree with you more. The direction clearly is that it's going to drive rates down. I think it's very positive for the economy, positive for our cost of borrowing as a nation. And I appreciate your response there, Mr. Chairman. Thank you very much.
Yes, sir. Senator Cortez Basto.
Thank you, Mr. Chairman. Chairman Powell, it's good to see you. Thank you for being here. I want to follow up on a question from Senator Warner about data deterioration. I'm concerned about that as well. That the Trump administration, I'm watching as they've ended dozens of research studies that business and government leaders rely on. So my question to you, are there specific research projects that the Bureau of Labor Statistics provided that they no longer do provide, that the Federal Reserve researchers cannot replicate on their own or through other sources?
I'm not aware of any.
Okay.
That doesn't mean they don't exist, but mainly it's the regular data they supply. And as you know, they've cut back on the size of that survey.
Right. So I would hope as we move forward, and not just in today's hearing, but if there is some other data, or you're relying on data that you're not getting, or there's now another source for that data, I would please share that with the committee. Thank you.
Yes.
During the Biden administration, the Federal Housing Finance Agency and the Federal Reserve worked together to improve access to the discount window for banks. What is the status of that collaboration with the FHFA?
I can't speak to the FHFA. I can speak to the fact that we're really looking carefully at modernizing the discount window and making.
But we're not there yet.
No, it's going to be. This is a project that will take some time. It's the discount window needs to be updated and refreshed from a technological standpoint, so that people can access it readily and that kind of thing. It's still a little bit behind the age in that respect.
Do you have a time frame that you're looking at to?
I'll get back to you. It's something we've been working on hard.
Or is there a funding impediment that is also addressing this?
No.
So, okay, if you could.
We're moving ahead with it. I'll come back to you on that.
Thank you. In March, the Federal Reserve, together with the FDIC and OCC, announced that you all intend to repeal the 2023 Community Reinvestment Reinvestment Act proposed rule. I prefer the proposed rule, as it would better address the needs of states like Nevada that don't have headquarters of large banks. How will you ensure that the new CRA guidance improves access to financial services, to loans, to investments in underserved rural and tribal communities?
So I think in March we announced that we're putting out for comment really a proposal to withdraw the proposed guidance, which had been the subject of litigation, And in the meantime, we're going back to the old CRA rules, and I think that's where we will be. I don't have anything more in terms of what we might change with respect to those old rules, but that's where
So
we
the
are.
default are the old rules,
Yes.
and those may be.
CRA as it existed before
Ongoing,
this
yeah.
proposal, which actually never took effect.
Right, right. Okay, that's helpful. Community banks benefited from high deposits during the pandemic. Since then, the net interest margin for community banks has fallen. What specific challenges do you see for community banks, if any?
Community banks, are very important. We want a banking system that has all different sizes and shapes of banks, and community banks are absolutely critical. They know what's going on in communities and in a way that the big banks can't possibly. So they're a critical part of our infrastructure, and I think they've been under pressure because, frankly, regulatory costs fixed costs of regulation have gone up. We try not to contribute to that. The number of banks has been going down pretty steadily. And that's not something we're trying to foster, but it's a sort of long-run trend of really the last 30 years. So we try not to add to what is a secular trend because we think they're important.
Thank you. Thank you for being here. Appreciate it.
Thanks.
Ms. Chairwoman, I yield my time.
Who's up next? Senator Britt.
Thank you very much, Madam Vice Chair. Chair Powell, thank you for being here with us today. I want to start just by echoing the comments of Senator Cortez Masto when it comes to community banks. Obviously believe that community banks and credit unions, financial institutions that serve everyday Americans and main streets across the great state of Alabama and our country are so critically important to people being able to actually achieve the American dream. And want to make sure, I know we've talked about this the last few times that you've been in front of us. We've talked about the rewrite of Basel III. We've talked about long-term debt. We've talked about Reg II. We talked about a ton of things and talked about my concern that no one was looking at the cumulative impact of those things and the trickle-down effect. I just want to get a commitment from you that as you are reviewing rulemaking across the board, that you will consider and make sure to make the perspective of the smallest U.S. banks and non-financial industries like the ag sector who did not maybe have a seat at the table in previous administrations, but give them a seat at the table and make sure that you're thinking about the impact on those individuals and the people they serve.
I'm happy to make that commitment.
Thank you so much, Chair Powell. I also want to talk to you about an issue that has been brought up briefly today by another colleague of mine, but that is about childcare. So when we look at the childcare crisis in this country, we know that our economy loses about $122 billion a year because of affordability and accessibility, reliability, if you will, of childcare. It is said that anyone who has a child between the ages 0 and 5 actually spends 22% of their income on childcare. We have done the studies and looked at the numbers, and 59% of stay-at-home and or part-time working parents say that they would like to re-enter the workforce, but that affordability or accessibility is an impediment to do that. As we are looking to build back America, as we are looking to create opportunity and bring those things into fruition, would you agree that taking a look and being able to address, not asking you to comment on any specific proposal, but addressing some of the shortfalls related to accessibility and affordability of childcare would have a positive long-term impact on the economy?
So I think there's quite a bit of research showing exactly that, and we really saw it during the pandemic. As I think you know and pointed out, it's not an issue that we play a role on, but clearly it would contribute. Childcare would contribute to participation in the labor force by many.
Absolutely. And as Alabama looks, we look at our labor participation rate. It is 5 points lower than the national average. We continue to look to ways to get people re-engaged in the workforce and know that addressing this head on will help us be able to achieve that. So thank you so much, Chair Powell. I look forward to continuing to work to get that done. So there has been some angst vocalized about the reconciliation bill and the president's trade policies. And from my perspective, much of that skepticism is both unfair and premature. Market resiliency and recent economic data actually continues to reflect confidence in the U.S. economy. Look at the recent Treasury auction, which was notably successful and saw stronger than expected demands for 30-year bonds and stable, even slightly declining yields. To me, this demonstrates that investors still view the U.S. debt as an attractive asset, regardless of the ongoing policy discussions and debates and forging a pathway forward. And those fundamentals of the economy, actually remain quite strong. Chair Powell, would you agree that the components of our economy actually remain quite strong? And how does the Fed consider this type of strong auction performance in the context of your market expectations and monetary policy discussions?
As you point out, the Treasury market is working fine just now. Liquidity is adequate, and bond prices are responding to economic events, and so bond market's in good shape. In terms of the strength of the economy, I would strongly agree. The labor market's in a solid place. The economy's growing. Inflation is in a pretty good place, come much closer to 2%. So it's a very solid economy. We are watching the labor market very closely, as we always do. And a couple of things in particular. One is just a very low hiring rate, which goes with a low layoff rate. But if we were to start to see layoffs, we would see unemployment go up quickly, and so we're watching that carefully. But we really the labor market has remained solid, and I would agree with your overall characterization.
Thank you. Appreciate you being here today.
Thank you, ma'am.
All right, Fed Chair Powell testifying in front of the Senate Banking Committee, his second day on Capitol Hill in the semi-annual testimony. Not really saying anything much on the market that would move the market when it comes to monetary policy. Not getting a ton of monetary policy questions, but he just reiterated what he has said many times, including last week at the Fed meeting, which is the labor market is in a solid place, very much in a wait-and-see mode when it comes to cutting interest rates and judging whether there's going to be inflation as a result of the tariffs. Mike, stocks are a little bit weaker today, but not sure that Powell's saying anything one way or another.
No, they were wobbling early. In fact, it was majority of stocks kind of pulling back after yesterday's rally. Before today, oil's up a little bit, yields are bouncing. I think it's much more kind of reiteration of his justification of the wait and see stance. He's been pressed by a lot of the Republican members to essentially say, why do you feel as if you have to leave open the question of tariff inflation? And he's trying to say, look, we don't have an emergency to respond to on jobs. The economy is okay. And essentially trying to say, really not weigh in too much and trying to project what the impact is going to be. And so there you go. But the bond market is not seemingly responding very much to the
He doesn't take the bait. I mean, they ask him about the big, beautiful bill. He won't even say big, beautiful bill. He calls it the reconciliation bill. They ask him about tariffs. They ask him about the deficit. I mean, he will not judge. He will not take the bait when it comes to judging or even commenting or having any kind of headline around any of the Trump policies. Let's bring in CNBC senior economics reporter Steve Leisman. Steve, did you hear anything that investors should be paying close attention to?
No, all of this reminds me of, when you had those little balloons you used to hit as a kid and they would go down, then they'd come back up. They say inflation is low and power goes down and comes back up. Yeah, wait and see. And they say deregulation, and he goes back down, comes back up. He goes, wait and see. And you're right, Sarah and Mike. This has been 2 days of mostly Republicans trying to hit him with this idea that you can cut rates, and Powell saying, but tariffs, wait and see, in probably, I don't know, at this point, 50 or 60 different ways of him saying the same thing. They did go after him politically, saying, hey, you didn't say anything when Biden was spending all that money, and now you're politically against tariffs. And he says, wait and see. So that's pretty much where we are. Made a couple comments about the dollar. I do see the dollar weaker. I have a hard time connecting that to what the chair is saying. Also, some comments regarding deficits, and he did agree it's a problem on a long-term basis. Wouldn't comment on the big, beautiful bill, as you said.
Yeah, wouldn't even say it by name. Steve, we heard from the president also in the last hour or so. He's at the NATO meeting, and he was asked by Bloomberg about his criticism of the Fed chair, and boy, did he keep the pressure on. Listen to what he said at the news conference.
I know within 3 or 4 people who I'm going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible. We have no inflation. We have a tremendous economy. Hundreds of billions of dollars of tariff money is pouring in. Factories are being built because they don't want to pay the tariffs, so they're building them all over the country. I think we're close to $15 trillion. I told you $5.1 trillion from the Middle East alone, but of investment money coming in. There's never been anything like that in the history of our country.
There's the president repeating, Steve, the criticism, the insults, about Chair Powell. He thinks interest rates should be lower. He thinks he's a stupid person because we don't have a lot of inflation, in the words of the president. And then did indicate that they're talking to a few people about next Fed chair. I mean, this is a multi-month process that I guess has kicked off.
Yeah, I mean, first of all, it is pretty extraordinary watching the chair exercise the statutory or legal independence of the Federal Reserve. He doesn't react to the president. He doesn't comment on the president. I would also comment that the language in the Senate and House hearings were quite a bit different, much more deferential, not using that kind of language that the president uses. I don't know if that's good or bad, but it's certainly remarkable that the language is very different. He wasn't called stupid or too late or anything like that.
No,
there
they
is
respect him.
Pressure on. Sorry?
They respect him. I mean, Congress has always shown him respect, both sides of the aisle.
Yeah, much more the way that you and I are used to having these hearings where there's plenty of room for criticism, but again, not that kind of language being used. I'd also just point out that he has a legal ability to do what he thinks is best, and that's what they're doing. And it's very important, I think, that the Fed chair is not saying he won't cut rates. Certainly the market, if you look at the probabilities, guys, July is not really, it's up a little bit this morning. It's not really the bet of the market. And it's also, and then you see these greater confidence in September and December. Fed chair is not saying he won't cut interest rates. He's saying he needs to see what the inflationary impact is of the tariffs. And he did say that if there's more certainty, if there's more deals, well, that would help quite a bit in them getting to that place. Ultimately, I think the market doesn't really care if it's July or not. When I look at the trade there, and maybe Santoli wants to comment on this, there is no July trade in the market, not in the Fed funds futures. I would expect it's also not in the stock market. But there is a trade that, hey, the Fed rates will come down. There will not be a major inflation problem that will cause or require the Fed to cut to increase rates. I think that's important. And I don't think the market really needs a July rate cut to be where it is right now. It is extraordinary. I will point out one other thing, Sarah, that I'm watching. It's a comment made yesterday by John Williams, which is the extraordinary disconnect from what businesses are saying sentiment-wise and what the stock market is doing. It's a bit like a manager of a team saying, I lost my main player, I'm really pessimistic about the outlook, and the betting market still makes that team the favorite. That's where we're at right now. We had our CFO council dinner last night. Of 10 people around the table, 7 were very concerned and remain concerned about tariffs and how it's going to affect their business. Stock market, apparently less concerned.
Yeah, I think that's fair to say. I mean, look, the stock market is very confident in a handful of things. One is the AI theme, the strength and durability of it. Another is this idea that the consumer so far has given you enough evidence that it's resilient and that tariffs, maybe it's out of sight, out of mind because there hasn't been a lot of fresh progress or news about that. But it seems as if the market's decided to price in a kind of a glass half full version of what ultimately we end up with. So we'll see if those bets pay off. But you're right, the stock market is not sitting here on pins and needles about a July rate cut because they think the economy is in significant trouble. Steve. Steve, by the way, we do want to get to some breaking news here. Let's get to on some potential M&A in the energy space. Our Brian Sullivan has it for us. Hey, Brian.
Well, it's potential M&A in the energy space, and it's a story in the Wall Street Journal, and it's moving some stocks. My phone may ring during this segment. If it does, I might actually pick it up. Okay, here's the story. The Wall Street Journal out with a story, Shell in early talks to buy BP, the former company, British Petroleum. It would be about an $80 billion deal if indeed this is done. This is according to the Wall Street Journal. This just broke just now. Okay, so I'm working to get in a hold of the companies individually, but I am also talking to people in and around the industry. Now, if you remember, guys, back in March, we had the CEO of Shell, Wael Sawan, on with us on Squawk Box. I asked him directly, would you consider buying a BP? Kind of danced around it. Obviously, no CEO is going to come out and say, yes, we would. But let's talk about why this deal might potentially occur, guys, which is that this would put Shell back into the Permian Basin. They got out of it. BP owns assets in Texas. They could possibly shed some assets by the combinations, their trading operations, for example. Shell has the biggest and I think the most profitable oil and energy trading operation in the world. BP's much smaller. You could sort of combine that, do a lot of work with Shell. They've got some assets out in the Gulf of Mexico as well that could potentially be combined. So, guys, Shell in early talks to acquire BP. You can see BP stock is up 7.5% right now. Again, we asked the CEO of Shell directly about this, trying to turn around that soundbite as quick as we can. This is all just happening real time. I don't think if a deal got done, it would be a surprise to anybody.
Okay, but you're seeing the market react, as you mentioned, Brian.
We do have the
BP
soundbite ready?
shares.
All right, well, so guys, can I run the soundbite? Because I don't want to speak for the CEO of Shell. Sarah, I know that you've talked to Wael Sawan many times as well. Back in March on Squawk Box in their Investor Day, this is what we asked the CEO of Shell.
We have a lot of running room within our own portfolio. We are able to grow 10% free cash flow per share between now and 2030 by focusing on what we do and what we do well. That's what our focus is. By the way, that doesn't mean we will not look at inorganic opportunities, but the bar is very high for inorganic because the alternative is to plow some of that capital back into our own shares, which trade at an attractive free cash flow yield and whose risk that we really understand and we can control. And that's always the balance we're looking at.
Yeah, and Sarah, listen, size is everything in the energy world right now. You want to have that scale, especially if oil prices continue to go down. And BP kind of lost its way for a long time. They did this whole Beyond Petroleum campaign. They did heavy into renewables. That's a very European thing as far as basically getting rid of fossil fuels. They've repivoted back the other way, but the company has not performed like many of the bigger players have. And this combination, if indeed it were to occur, would be, I think, the biggest energy deal ever, or at least inflation adjusted since Exxon bought Mobil.
Okay, well, keep us posted on what you learn.
There's my phone.
Brian, after the report. That's a funny ring. Brian Sullivan. Meantime, another big mover today. Look at shares of General Mills reporting an earnings beat, but revenue coming in just under expectations with a, quote, challenging consumer backdrop weighing on the company's outlook. Joining us now in a CNBC exclusive is General Mills CEO Jeff Harmening. Jeff, it's good to have you back on. What are you seeing right now from the consumer?
Sarah, it's good to see you as well. And, what we're seeing from the consumer really isn't surprising. For the last few months or so, the consumer really has faced a lot of uncertainty, and in a whole variety of ways, whether that's economic uncertainty or uncertainty with tariffs or global conflict. I mean, we all know the list. And when consumers feel a little bit uncertain, they tend to pull back on their spending a little bit. And so we see that. I mean, it's one of the reasons why food at home consumption remains pretty robust. About 87% of food consumption is at home, and they're eating out a little bit less. But it also means that we have to have our value right. So the consumer is still spending money, but they're certainly uncertain. And that makes for a pretty volatile environment.
So where does the business go? Does it go to private label? Is that where you lose to in that kind of uncertain environment?
Well, one of the things we found over this last year is that the consumers became a lot more value conscious. And so we've reacted to that, and over the last 6 months have made significant investments in the value of our brands. And we're actually seeing really good results. I'm encouraged by the last quarter of our results where we saw pound volumes shares increase in more than 60% of our categories in our U.S. retail business. We held share in our pet food business and grew share in food service and international. And so we see consumers looking for value, but when consumers look for food, they also look for other things. We really see them looking for bold flavors, nostalgia. When consumers get stressed, they really look for something that they know and trust, and then obviously health when it comes to protein.
Yes, I mean, I was asking because, Kroger just had really good results, and the grocery sales haven't been that weak. So I'm wondering why, a packaged food company wouldn't be doing better in this environment. Do you see any impact of GLP-1s or the MAHA movement or anything like that?
Yeah, so our categories are growing, and for the first half of our last fiscal year, we trailed the growth of those categories. But as I said, we've turned that around, especially over the last 3 months, behind investments in growth, particularly to get the value right. But also, as we look ahead, and kind of giving consumers what they want. I talked about protein. They want more protein. And certainly about 12% of adults are currently using GLP-1s. We have protein news in most of our categories. We now have a $100 million business in cereal and protein, things like Cheerios protein and Nature Valley protein. We have the biggest protein bar in the bars category in Nature Valley protein. And we have a new soup coming out called Pitmaster, which kind of combines really bold flavor with 20 grams of protein. And that's coming out from Progresso. And so we are seeing consumers look for more protein. We're giving them that, but they're also looking for things that really taste good. I mean, we're coming out with bigger cookies on Pillsbury. People love the Doughboy. As I said, when people get stressed, they look for nostalgia. So bringing back the Doughboy or bigger marshmallows and things like Lucky Charms. And so we are really innovating our way back to growth. Value is important, but also some of these other trends that I just talked about.
Jeff, you mentioned the relative strength in some areas like pet food, like food service. Is that a formula for adding more investment in whether it's in M&A or it's organic in those areas, or you just want to more wait for the rest of the portfolio to come back?
You know, our number one priority this coming 12 months is really to accelerate our organic growth. As you mentioned, we've regained some momentum back in our pet food business this last year. We'll be adding onto that with a fresh pet food launch, as well as a lot of news on our core. We bought Tiki Cat 6 months ago, and it's doing very well. We made an acquisition in Europe called Edgard & Cooper. We're bringing that to the U.S., and that's growing at double digits in Europe, so we're thrilled with how that is doing. And so getting back to organic growth across our core is the most important thing. In fact, we expect our new product innovation to be up 25% this coming year behind all the trends that I had talked about. Of course, we still look at growth M&A. We have done a lot of acquisitions and made good acquisitions and made those work. So we'll certainly still look for those. But our number one priority for the next 12 months is to really invest to get back to organic growth.
Well, Jeff, we appreciate you joining us for the update and want to have you back on soon. It was a busy breaking news kind of hour.
Great to see you.
Good to see you too, Jeff Harmening, the CEO of General Mills. Getting a check on the markets as we head to break. Stocks are kind of hanging in there just barely, although it's only a few sectors that are carrying the S&P right now. Communication services, information technology, and energy. Everybody else is weaker. We'll be right back. Stocks have lost some of their early morning gains. Technology is keeping the S&P above the flat line, Mike, which has really been the story. Technology leading. Fed Chair Powell, day 2 of testimony, didn't really say anything to move markets on one way or another. And the president continues to beat up Powell publicly. He did it from NATO again today, said that they're talking to some folks. I just went to Polymarket, since now Polymarket is the authority after the New York mayoral Democratic primary. Chris Waller, 28% after he came out, of course, moved the market, said that he'd be in favor of a July cut and looking through any tariff inflation. Kevin Warsh is at 19%, Kevin Hassett at 12%. I think there'll probably be more names to appear. These are just some of the
president said that he actually said there's 3 or 4, that are kind of in the mix. Waller is interesting in the sense that I think he has respect of people in the markets and in the economics profession for kind of having called the turn right a couple of different times.
Yes.
Right? He's not known as being entrenched as either leaning hawkish or dovish.
And Kevin Warsh leans hawkish, which may be a problem for this president, but he's also, very connected in the Republican Party.
Exactly, yeah.
So, there'll be other names. I don't know. I think you should look at Gary Cohn. I think there are other people.
Oh, there's plenty of names to look at for sure.
That he should be talking to.
It's interesting, though, how much the chair is going to be able to truly dictate, right? Because if we see how the committee's broken down right now, it doesn't turn over that quickly. There's still some skepticism about just how much and how soon they're going to be cutting rates from here, but we'll see. We'll see how that evolves.
Independent they will be with this president very vocal and very opinionated on where interest rates
Look, we could end up in a place where the data actually feed in the direction of what the president's been advocating for a long time, and perhaps you end up having an easing bias, and we're in that spot. It's kind of a soft landing, good news rate cuts type of a moment. That's what most people would hope for, and that's what Waller's
What do you
been
see in the
talking about.
action today?
Very weak below the surface, very negative breath. It's NVIDIA kind of trying to hold everything together. But look, we came within 1% of the all-time highs in the S&P 500. Normally when that happens, a little bit of a gravitational pull toward that old high. We'll see if that holds this time.
New home sales data.
New home sales very weak, and the builders are down on it.
All right, that's going to do it for us this hour. Thank you, Mike. See you tomorrow. Over to Scott in the halftime report.
All right, Sarah, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour, the tech takeoff. The sector hitting a new all-time high, S&P less than 1% away from its own milestone. We're trading all of it, of course, with the Investment Committee. Joining me for the hour, Joe Terranova, Carrie Firestone, Jason Snipes, Steve Weiss. Let's check the markets here. We're a little mixed today. Obviously, you heard Mike talking about breadth underneath the surface here, not great. It remains very much a tech story. Joe, that's what's gotten us to within 0.75% on the S&P from a new all-time high. And the tech sector, as we said, the NAS 100 is at a record high.
S&P equal weight is down 60 basis points right now. So the broadening out narrative that dominated the early part of 2025, it's not in play. Steve has often mentioned, don't go away from the Mag 7. Well, here's the reasoning why. It's a Mag 7 story right now. It's about trying to get NVIDIA above that all-time intraday high at $153.13. We stalled at 153. I'm sure we'll take it out at one point here very soon. But it's about technology. It's about new 52-week highs.
Microsoft, record high.
Palantir, Oracle, Cisco, IBM, the revenge of old technology, CrowdStrike, Broadcom, Amphenol, all about technology right now.
Yeah, Kara, is this the way you want to ride this market right now?
Well, definitely.
Because, by the way, you know what? Before I let you answer that, it isn't just about technology.
Financials.
Okay. Industrials are record high. Financials are only 1% away. Utilities 2% away. I know it appears as though it's all about tech, but actually it isn't. There's a lot that's working.
Yeah, so I was going to say that not Mag 7, Mag whatever, 4 or 5. It's the ones that are less affected perhaps by tariffs, Microsoft software, social media, communications sort of leading the way here. But financials, again, very strong. I was looking at names of American Express, Charles Schwab, the semiconductor cap equipment, the industrials, Wabtec, a name we own. It's a combination of U.S. base or don't care about the tariffs because they're not going to hurt me per se. And that's a theme of this market. It's why Apple is down and Microsoft is up. But it also is going to push against where we can be the upper limit with earnings coming in, and who knows how strong. But if you're 28 times earnings as a group, it's hard to push through that. We can get through this beyond the old S&P 500 high, but going up a whole lot further than that, I don't know. I think that we run into some selling pressure.
Okay, we're going to bring in somebody in a moment who says we are going to go much higher than that. So he'll push back on that. But before we do that, Jason Snipe, how do you see this market right now?
Yeah, I think you got to respect the tape, Scott. You know, when I'm looking at, even some of the higher level kind of macro, oil is down 15%. The VIX is down 15% in the last 2 days. ARK Innovation's up 8%. So there's some speculative fever that's going on. Gold also down 3.5% over the last few days. And just thinking about this Iran conflict, we're kind of past that story and all the flows that are coming into AI, what's going on with financials. So for me, I remain bullish on this market. I think there's a lot of, even the tariff story, I think has been quieted down, and just kind of paying attention to the price action. I think you have to kind of ride the wave here.
Yeah. Barclays Weiss says big tech inflows save America. It's helped the overall U.S. outperformance of late. UBS says the tech rally has legs. We said Microsoft hits a new high. NVIDIA's not that far away. How do you see it?
That's how I see it. I run a concentrated book, and most of my book is in big cap tech. So to me, they're permanent compounders, and sure, valuation gets stretched every so often, but they eventually grow into that valuation. Plus, they've got the best balance sheets. They spend for growth, which is what their AI spending is, and the concerns about will they make money off of it, I think, are misplaced. They will. The timing is an issue, but they will make money off of it. So I don't know. I know why you want to be in other areas, as I am, and some of those areas that you mentioned, frankly. Yeah. But at the end of the day, they're just permanent compounders that deserve, by and large, the multiples they get. So why stray?
So let's bring in the person I suggested thinks we are going to go not only to new highs, but well beyond that. Is Brian Belsky. He has raised his S&P target now back to 6,700. He joins us by the phone. So you're playing this game. I mean, the market goes up and you reversed course here. Why?
Great question. Thank you so much for having us. I know you love it when I say it, but I'm humbled to be on. We wrote a piece 3 weeks ago, Scott, and kind of detailed what we needed to see in terms of signposts with respect to be bullish. Now, coulda, shoulda, woulda in terms of raising our targets a while ago. We wanted to make sure that we started to hear more about companies providing guidance. We wanted to hear more about and see actually less the law of diminishing returns in terms of the rhetoric and noise out of Washington. And then lastly, in terms of our own fundamental work, which we've been publishing for a long time, when we take a look at earnings, which is a cornerstone to why we continue to be long tech, communication services, financials, and discretionary, is for years and years and years, part of our process has been looking at earnings revisions. And earnings revisions for the majority of these sectors, especially tech, have bottomed and are going to, we believe, begin to go up a lot. So we think at the end, the last 6 months of the year, so the next 2 quarters, we actually think financials is the area where analyst numbers are still way too low, and we're going to see a lot of very strong balance sheet and cash flow there that is going to drive earnings going forward. So that's why we are overweight those 4 sectors. And oh, by the way, from a fundamental bottoms-up perspective, that's why we still like the market. And oh, by the way, have the entire time. When we did lower our target, by the way, in April, we made a comment. We said we own what we own. We made no changes to our portfolios or allocations. So April, May, June have been one of the best performing quarters of me running money as a published analyst for over 20 years. So we were right to remain prudently bullish, and now we're just adjusting our target as such.
I'm just wondering if you're in any way premature in doing so. And the only reason I ask that is because if you're making a declarative statement that guidance is going to be good, how do you know? Number one, earnings season hasn't even started yet. You're making a declarative statement that there's more bark from bite from whatever happens out of D.C. How do you know? We don't know what the ultimate levels on tariffs are going to be. The market obviously appears to be somewhat desensitized to that. We don't know the end game to the big, beautiful bill. And when you declare that the death of American exceptionalism, as you have today, was widely exaggerated and too vehemently applauded, these are your words, to hold any merit or duration in our view. I mean, there has been something going on with the bond market and the dollar. So you make very clear statements here that I'm wondering why you're not at risk of being too early.
Thanks for asking that. I really appreciate that. As you know, my job is to be the chief investment strategist for BMO Capital Markets. We have the great fortune of traveling around the world and talking to clients all over the world, my institutional clients. We also know our institutional clients are massively overexposed China and Europe, and because they left America, not because of fundamental reasons, but because of other reasons, they've been reluctant buyers of U.S. stocks for over 20 years, and they saw their opportunity to do so. Now we've seen the relative performance of those areas begin to suffer greatly. We've also seen the relative performance of the dollar. The majority of its losses were actually done the first 4 months of the year, Scott, something we talked about last time when we were on your show. In terms of the bond market, we are seeing some solidification, which we've said now since November of 2022, that we believe that 10-year treasuries are going to be entering a range between 350 and 450. From a normalization pattern, which we do believe that the major trend in markets the next 5 years is normalization, that's a pretty good environment to be in. Lastly, in terms of guidance, when you take a look at charts, right, we are not technicians, we are not chart followers or affirmation confirmation. At the end of the day, we like to be more contrarian. If you take a look at the number of companies in the S&P 500 that are actually providing guidance, it's beginning to, not providing guidance, it's bottoming out. You want to buy things on the turn. So we believe that more companies are going to be, we're getting ahead of this because that's investing. You want to be before things happen. Companies are going to be providing more guidance in second quarter. Financials are going to crush the numbers. Financial companies are going to be the first to provide guidance for the rest of the year, and the market can, will, and should applaud that.
Weiss has something for you, B. Go ahead.
Yeah, it's kind of interesting you talk about guidance when we've been in a quiet period for about 2 weeks and companies haven't even been able to talk to anybody about guidance. And as you go and look at the guidance going forward, you have to make the assumption that we're going to get an awful lot of trade deals in the next week, or that tariffs are going to come in big time on July 9th, or Trump is going to push it forward. And given how unpredictable this administration is, what I come out with, because I also don't agree with your statement that it was vehemently applauded that American exceptionalism is dead. I think that headline lasted for all of 2 minutes. So to me, Brian, and I'm humbled to be able to put this to you this way, is that you came to your conclusion first, then look for a way to support it, and that way to support it is built on a house of cards or uncertainty. So you're making a bet, and I get that, and that's what you do for a living. That's what I do. But I just don't think you have the ammunition at this point in time to make that bet.
Well, thanks for your comments, Steve. I appreciate that. But what we do is research. We look at all 500 companies in the S&P 500. We also run all cap monies. We look at another 1,000 companies. So I have a team that scours through earnings releases. I know we're in a 2-week quiet period, but not all companies report on a calendar basis, Steve. Also, with respect to, you have to also, as I said in my comments to Scott and what we've written, you have to dovetail and combine what earnings revisions are actually doing, Steve, which the path of guidance. So sometimes you do have to make a call. A house of cards, I think, is too strong. We're not going to comment on politics because I think what politics, again, have proved this year is that politics have nothing to do with the absolute performance of the stock market. It can either enhance or detract. It's been proven out this year. I'm not a politician.
No,
I'm not a politician. Steve, can I speak, please? Listen, I am an analyst. I'm a published analyst. We've done the work. We've proven ourselves. We have a published track record. I speak what I speak. I say what I mean, and it's been proven. And it's been proven in my results. So you can punch holes in it as much as you want. It doesn't do anybody any good. I appreciate your side of the story.
B, so you're with us on Friday. I'm going to give Joe Turnova has a question for you too. Well, let's do that. And then I'm going to get to some news in a moment. But go ahead.
Brian, third quarter debt issuance rises significantly for governments, corporations. Where are you on the relationship between rising debt issuance, yields that potentially could rise, not just here, but around the world, and that relationship with equities?
It's a great question, Joe. Nice to hear your voice. We published this thing called the U.S. Chart Book, and we have a page for every single sector where we look at the operating performance of sectors. And if you take a look at where free cash flow is and where debt to equity is, the majority of debt to equity ratios for the majority of sectors, excluding utilities, straight down. Free cash flow straight up. In terms of debt issuance, we'll see with respect to what's going to happen with the Fed. Our call is not encumbered on the Fed cutting rates. Our call is all about what we're seeing in earnings and what we're hearing from companies. So I do believe that from a corporate perspective, in terms of the actual financial statements of a company and the sector which we look at, we think the U.S. companies are very well positioned.
All right, we'll leave it there. Brian, thanks for calling in. We're humbled that you're so humbled to be on. We are, and we'll see you in person, I think, on Friday, which is even better that we get to see your face and not only hear your voice. That's Brian Belsky at BMO. We do have a news alert. Brian Sullivan has it. More on those Shell BP talks. Sully, what do you got?
Yeah, so the Wall Street Journal, by the way, about an hour ago, putting out a story that Shell is in advanced talks or talks to potentially buy BP. I'm not going to throw entirely a bucket of cold water on that headline, but I will say that I've talked to a number of sources at companies in and around the industry, bankers, et cetera. And here's what CNBC can report on this. It is unlikely that BP would be bought by Shell in its entirety. It is more likely if a deal transpires, and it's possible no deal does transpire, but if a deal does transpire, it is possible that BP is effectively sold not in chunks, that's a bad term, but maybe Shell buys some and say an Abu Dhabi national oil company or another international buyer buys other parts of BP. Again, this is in relation to the Wall Street Journal story regarding Shell potentially in talks to buy BP. My sources, CNBC, can confirm that if there are talks, it is potentially about BP being bought in parts by multiple buyers, not just the Shell. Why would that be the case, guys? Well, BP, remember, really hasn't been itself since the Deepwater Horizon disaster in the Gulf of Mexico. Had to spend a fortune on that. Terrible PR, just an awful disaster. The company then tried to pivot to more sort of renewables outside of oil and gas, changed the name effectively to Beyond Petroleum, and some of the marketing campaigns. The company struggled. Their leadership, Bernard Looney, left the company. Murray Auchincloss is now the CEO. So there's been a lot of changes at BP. The stock has not performed along with the rest of the group. And Wael Sawan, who is the head of Shell, he's the young, aggressive CEO who wants to get more in the profitable areas of the business, certainly could look to make a deal. But if it's done, guys, it probably would not be BP being bought as a whole. It might be Shell buying some and another potential buyer buying others. I will continue to update the story as I do reporting throughout the day.
All right, we'll follow it.
Thanks.
Sully, thank you. It's Brian Sullivan with the latest as we follow that developing story. Carrie, you have a thought?
I was just going to say that when I followed the oil industry, which was decades ago, it was the crown jewel of the British government's connection with industry. Sir Colin Marshall was knighted. It was just a phenomenal business with all of the oil in the North Sea. And what's happened since then is it's been an unbelievable tough situation the last 15 years.
Joe, you have a thought on that?
I know Paul Singer and Elliott were still there. Steve, do you know if they still maintain the position or not? But
don't know, but the position's not big enough to drive a conclusion here.
But listen, BP, to Brian's point, has struggled. This would create quite a conglomerate, though, in Europe. This would rival the size of Chevron or Exxon. So I see this potential synergies, and the synergies really exist just because of the struggles that BP has had over the last several years. I think there would have to be a strong premium here that Shell would have to pay of at least 20 to 25%.
It'd have to get through the government also.
We might as well talk about industrials at the moment, frankly, if that's a segue or not. We're going to do it anyway. It's at or near a record high for that space, and there is plenty of ownership on this desk. Weiss, how do you, so Caterpillar, FTAI, Leidos, the XLI, ETF. What about that space in the here and now? It's trying to raise its hand and say, hey, don't forget about us. We're doing quite well. It's not all about tech.
Yeah, and there are different elements to it. The airlines, of course, part of the industrials, and flying. Airfares have doubled and tripled, and they've So despite cutting capacity in some of these markets, they're generating much more revenue, much higher profitability. So that's one reason of the industrials. But overall, I think it dovetails with the move in the market. So as the market moves higher and is led by one group, you look to spread out your bets and see what hasn't had that kind of move. So that's why Caterpillar is one of the reasons why I'm in it. And if I'm wrong on what guidance is and what the economy looks like, then I want to have exposure there.
I mean, the economy looks pretty good. I mean,
it does, and we heard from
it looks good
today.
Fed Chair Powell continues to say as much. I mean, the bulls like Belsky, they may have the last laugh in this whole thing. Yeah, but quite frankly.
But what we don't talk about, and I don't expect to see employment really drop, unemployment really go up, is that when you lose the immigrant labor that you have, you tighten the labor force. And what that means is you've got to pay a lot more. And we see in some of our companies, we hear about from other companies, and whether it's the electrical contractors or other contractors building out these big data centers, I mean, skilled labor is very tough to come by.
So wages go up and then the consumer hangs in and people spend more. I don't know what to tell you. I mean,
well, it's a certain segment of the economy. It's a skilled labor part of the economy, and it'll feed through the others. So I don't disagree, but if wages go up, the economy will do well, undoubtedly, but the Fed won't cut.
No,
and
but
a lot of markets betting on
if
that.
they don't cut because the economy is strong to the point where they don't have to, then so be it.
Well, my point is they may, in fact, I don't see it right now, but depending upon tariffs, which they're looking as a one-time event, and we'll know more in July 9th.
Yeah, and Powell himself doesn't know, which he continues to say. It's the only reason they're on hold is because they just don't know.
Right.
And they want to be extra sure.
Right.
Despite some of the other calls this week from other Fed officials that maybe July should be really live.
Right. But if my point is, if they've got a dual mandate. One's inflation, right? And that's the one I'm talking about. And you will see that with wages going up. They watch that very carefully. So they're in a very tough spot. The point is a 70% probability that we see in the markets of 2 cuts this year. I don't think that's a great bet. I think you could get one near term because it'll take a while for inflation to feed through.
The other area, if you want to say, is playing right in the hands of a better than expected economy is the financial group. Yep. Best week since mid-May. Over the period of 1 month, you have nice gains from the Citigroup's 11%, and the Goldman 10.5%. You've got Goldman. Jay, you got Goldman. IPOs have been picking up.
Yep.
We're not hearing animal spirits again yet, but there definitely is more optimism around capital markets activity.
100%. Let me clarify my remarks at the beginning of the show. When I was defining the environment, I said it's all about technology. I'm talking about today. The equal weighted is down 60 basis points. But you're right, Scott. You said this before. Industrials have been the leading sector. Financials are there to participate as well. As it relates to industrials, I think a lot of people have dismissed the premise that the commercial airline production growth was real. That's impacted a lot of those companies like HEICO and like Howmet. And then in terms of financials, if we were talking 6-9 months ago, we'd be talking about insurance companies. We'd be talking about Chubb and Allstate. We'd be saying, okay, when are we going to get the participation from other areas like private equity? Well, look now, you have KKR, which is finally participating once again. Certainly JP Morgan, which traded to an all-time high recently. That's working as well. So it's broadening out the opportunity in the financial sector. I also think that the market sees something in the regulatory relief in the back half of the year that is going to benefit the financial sector.
That's starting to get baked in, too. Jason, Blackstone and KKR overweight reiterated today at Morgan Stanley. You have Blackstone, Kerry does, too. But what your thought here on these private equity names, which are sniffing something out?
You got it. And obviously Blackstone has been an underperformer this year, down around 16%. But they really play in this infrastructure space. They just bought an energy company for about almost $6 billion that provides electricity to New Mexico and Texas. They have $177 billion of dry powder that's looking to be deployed. So I just think that the macro is less cloudy, which I think is creating an opportunity for these PE players to really get busy.
Yeah, I would say that in order of importance right now, regulations have been part of the story. It's deals. The idea that these companies can do deals and realizations are the IPO market picking up. And the last thing, if interest rates come down, that helps the PE market.
Weiss, you don't own any private equity names?
No, I don't, and that's been a complete miss. And I keep looking at my KKR. I like quite a bit. and I don't view them as expensive, but what the market's sniffing out here, it's very related to the bank trade because these companies have been running continuation funds, which means that they can't sell into an IPO market. So they give back money to investors, other investors step in. So if you can liquidate your holdings in the IPO market, you'll drive your fee realization. And so it's very, very closely aligned with the banks for those reasons. They are doing deals. They're able to finance deals. That's never stopped. So I do think they're good plays here and good buys. And I may surprise you next week.
Let's wrap up the block by just talking about a couple of moves from Joe that he has on something that he's talked a lot about this week. And last, it's the Israel ETF.
Yes.
You're out of it now?
Out of the Israel ETF, and the other side of that was ownership of Canadian oil companies Suncor and Enbridge. This was a collaborative trade that I put on Friday, June 13th. I was basically buying Israel. I've done well in that trade, obviously not so well in Suncor and Enbridge. Exiting the trade in totality, I have probably about a 3.5% gain on the whole trade.
All right, let's take a break. When we come back, a big drop for one committee stock, plus we will debate our top calls of the day. There are many. Halftime's back in 2.